Hey everybody, what's going on? It is James here, and I wanted to sit down and shoot a fast video this evening. It's a little after 9 o'clock at night for me, but I want to knock this out because I think there's big opportunities in the market, and I think that most people, in fact, I would say 99% of people, are completely ignorant of these opportunities. And I don't mean stupid, I don't mean dumb. I literally mean ignorant. If you've never heard of these before, and if you're not a professional trader, if you're not reading a lot of books on trading or buying courses on trading, and even then, most of the courses I've seen have never talked about this. Most of the books I've read have never talked about this stuff. So unless you just are doing this on a daily and day out basis, you probably don't know what I'm about to show you. And it's one of the biggest opportunities there is, in my opinion. All right, and this is something called vertical spreads, or debit spreads is another term that's often used for these. Now I have a whole course on these. I wrote it into my main course, so I'll put a link down in the description if you want to join the whole course. That's fine. I'd love to have you. Of course, that course also comes with access to my Racing Rabbit indicator, which you can see here actually threw out a signal back on Netflix back around 177, 180 bucks before it ran up to almost 220. But the main thing I want to talk about in this video is just the options and the spreads themselves. So let me kind of give you an example of this. So this was Netflix this morning, and of course there was regular trade opportunities here, but there was also spread opportunities. So you can see here that at 8:51, I told my Discord that I jumped back into a Netflix trade. That trade was actually what's called a debit spread. It was a long on the call side, but I also sold calls. And so let me kind of show you how that works real quick, and I'll give you an example. So let's say that you have a stock like Netflix, and let's say that you think that it's going to end the week around, let's say 210, 215. We'll say 215. You think that's where it's going to end this week. So what a person can do is obviously they can buy the stock, and then if it goes up, they can sell the stock. That's one way to go about it. But of course, that means every time you leave your desk, you're actually open to a lot of risk, because whether you know it or not, in the stock market, when you set a stop loss, if it's after hours or pre-market, they will not execute. Okay, that means that the price may move against you and it completely skips your stop, and you're just out of luck. But with an options trade, what you can do is you can buy a call or buy a put if you're bearish, and then worst case, you lose whatever you paid for that option. But there's an even better way to trade options, and that's something called, again, vertical spreads or debit spreads. And it works like this. Let's say that I think Netflix is going to end the week above 210. Let's just say that, okay? What I can do is today, being July 20th this morning, and this is what I did, I can buy calls. Now, I didn't buy these exact calls I'm talking about, but I can buy calls, and I can say, hey, I think that by Friday, July 22nd, so July 22nd calls, I think Netflix will be at least 210. Okay, so I might buy a $205 call. I might buy that call, and let's say, just for easy math, that I paid, say that I only bought one contract and I paid $100 for that contract. And then I might turn around and sell the July 22nd 210 call, and I might sell that for easy math. Let's say I sold it for $50. Okay, now what's happening here is, if I don't think Netflix is going to be very far above 210, what do I care about selling this 210 call? When I sell a 210 call, what that says is I'm willing to sell somebody 100 shares of Netflix for $210 a piece. Well, if I don't own that stock, that's very dangerous. So what I can do is I can buy this call here, and now I'm covered. What I'm actually playing is the spread, the difference between 210 and 205. So in this case, let's say that Netflix ends the week at 210.01. Well, what would happen is I would make the difference in these two calls, because I would be able to buy the stock for 205, and then I'd sell it to somebody else for 210, right? Not 210.01, but this 210 here. So $5 a share, a contract is 100 shares equals $500 profit, minus the $50, because I bought this call for 100, sold this one for 50. Again, I'm using these numbers for easy math. This is not exactly what I paid. This is not the exact calls I bought. So what you'd have is $500 gross profit minus $50 in premiums. You make $450 in that trade if you were right and it closed above 210. If you're wrong and it, let's say it dumped down to zero, guess what? The most you're going to lose is that $50. The difference in those two. You don't need stop losses with this, because your risk is automatically capped. Okay. This is how you play the bigger macro, not even necessarily macro, but the swings in the market. This is perfect for swing trading. Absolutely perfect, because you don't have to worry about unlimited risk when you go to bed at night if you're trading this way. All right. What happens if that stock went up and just exploded and went to $500? Guess what? Exact same result. You're not in trouble because you're selling at 210, because you're also able to buy at 205. You just make the difference. $5 a share minus the $50 you paid. What happens if it closes at $200 a share? Nothing. You don't sell anything at 210. Nobody's going to want to buy it at 210 when it's on sale for 200. And you're not going to buy, you're not going to execute or exercise your call at 205, because why would you? It's 200. So you just let everything expire and you lose $50. Okay. What happens if it's 207 at the end of the week? Well, in that case, this person is not going to exercise that call. That's going to expire worthless. You can exercise your call, right, for 205. So you're going to make $2 a share, $200 a contract, minus the $50 for premiums. You make $150, right? Now, you want to see a real example of this. So here's an example. Now, I've blocked out the stock because I don't want people going in there and trying to fight me for this stock, because I'm trying to build a position on it. But this particular stock, I hope to be able to get 100 contracts when it's all said and done. I think that it might have a little more upside in it still in this particular contract. And so what I'm trying to do is just buy little pieces of it, because I'm very bearish on this over the longer term. This is a January 2023 option, and it's a 10-7 spread. What that means is this is a put option. That means that if this stock falls, somebody's guaranteeing me that they'll give me $10 per share. I'm guaranteeing somebody else I'll give them $7 a share. So I stand to make $3 per share. This is 5 contracts here. I'm only bidding 8 cents a share, which means that if I get this order to fill, that I will spend $40 on this order. I'll have 5 contracts. So if you see here, my maximum loss will be $40. Whoops, got a little carried away with my arrow. My maximum loss is $40 plus, of course, the cost of the trade, which is $6.50 for commissions. So $46.50 is my maximum loss if this doesn't go my way. If it does go my way, my maximum profit is $1,460. And again, I'm trying to build a position of 100 contracts. I only got 1 fill today, and it was actually at 13 cents, not 8. So my maximum risk on that one was actually going to be about $130 plus dollars, and my maximum profit would still be fairly close to the same. It'd be like a 13 something, 1300 something. But if I can build a position of 100 contracts and I'm wrong, then I'm probably going to end up losing between $500 and $1,500 depending on my average cost. But if I'm right, I'll end up making over $20,000 on that trade. So that's a real life example. This is an actual order that I put into the system. This one did not fill. I did, like I said, I got fills on this order today around 13 cents a share. Hopefully, if price goes up on the stock, on this, what I think is probably a complacency bounce, then I'll be able to get more fills at 8 cents. And if it goes even a little higher, maybe I'll even get some fills at 5 cents and be able to bring that cost average down. But that's a real world example of how this works. And again, I did buy, I did calls on Netflix today, and those calls I bought were actually for August 26th, I believe was the date on those. So a little over a month out from now. And the target on them is a little higher than 210. I think Netflix has a potential if the market stays strong, and I think the market right now is in a complacency bounce. But if you look at, like a stock like Netflix fell, almost 80%, had really no bounce the whole way. It would make perfect sense to get some kind of complacency bounce here, especially putting in a double bottom. And then you go into a daily chart, big old gap up here, big old gap right here. So it stands to reason that, Netflix could potentially have a complacency bounce, and that complacency bounce could take Netflix all the way up to $325, right? I actually bought calls that were a little lower than that. I think I bought calls that were around 260 or 255. I think I bought the 255, 260 spread, if I remember right. Could be wrong on that, but I think that's what I bought. I'm not telling you to go out and do the same thing. I'm just, I want to give you a real world example. Like, this is stuff that I actually do trade. So I think, it's an opportunity that, I've been trading now, guys, for over 5 years. And I've talked to a lot of other people who trade either on the side or who trade they're fair weather traders and they know they're fair weather traders, meaning that they do really well in bull markets. And then when bear markets come, they just step back and wait for the next bull market. There's nothing wrong with that. I think it's intelligent to know your strengths and weaknesses. And if you're not good in a bear market and you don't want to learn to trade a bear market, I think stepping back is brilliant, right? But I know a lot of people who do this trading stuff, and I've never, ever, ever heard anybody else talk about this. And I didn't invent this. Don't get me wrong. I'm not saying, oh, I figured something out that nobody else knows about. I came up with it on my own originally. I started like putting the pieces together. I was like, wow, I can do this. And then I started Googling it. I was like, is this a real thing? Do other people do this? Like, why isn't this being taught or talked about? And it turns out it is talked about with hedge funds. It's like a hedge fund strategy. It is talked about with like big professional traders. It's just not talked about with Joe Blow on Twitter or Joe Blow on Facebook or the guy doing the YouTube channel telling you to buy Bitcoin at $60,000. You got to really, take advantage of the real opportunities there. And the real opportunities are happening every single day, every single week, every single month. All this talk and this worry about whether it's a bull market or a bear market, that stuff matters in the big picture as far as investing goes. Obviously, if it's a bear market, you want to be careful about taking out new investments because you want to wait for the market to put in some kind of bottom, right? Or if you're a big time 10-year type of investor, obviously you want to know, am I buying at the right places or whatever? But as far as trading goes, we don't care that it's a bear market. When a bear market gets overextended, you're likely to get a bounce. It's just like a few weeks ago, I did a video, I think it was the 1st, 2nd, maybe 3rd of July, and I said, hey, look, I'm out of all bearish positions on Bitcoin. I'm looking for a complacency bounce. And in fact, this was the actual chart. Let me get this crap out of the way so you can see it. This was the chart that I had shared, right? Saying, look, I think this has got a big bounce in it, that this is going to be not a complacency bounce, I apologize, our denial bounce, right? I felt like this was anxiety. And so I was expecting this big move up, right? I said on July 3rd, I was out of all bearish positions. And then again, I reiterated in my Discord on July 14th, I still think this is what's happening. And then pop, right? From what were we down to? 17, 18,000, right? All the way back up to 24,000. Now that's a big move. That's a really big move. What is that, about 25%? 22.7%. Doesn't matter that it's a bear market or that I believe it's a bear market. It doesn't matter any of that stuff. There was a trade there. There was a big trade there, right? Not necessarily from that exact bottom, but you go into like a daily chart. I mean, look at this daily chart, right? There's a short here. That's a whole other story. But when you come down here and you can't take out this low, and it starts moving back up, puts in a spinning candle or a doji candle, and then breaks it high, right? I'm not going to get too deep in trade setups and stuff because that's kind of outside the scope of this video. But there were definitely reasons that somebody could have got long, if not back in this area, definitely on the break of this candle here, right around 20,000 bucks. Okay, $20,090, and then it popped for over 20, almost 21% from that candle high. So who cares about all that other stuff? When you find these big swings that are about to happen in the market, you can take regular trades, like crypto's open 24/7. So of course on crypto, you can set stop losses and you're good to go. Or you can use options. And if you're trading stocks and you're looking at stock charts, the options are like, I love them. They have maximum upside while also having very limited risk. So just something to consider. I thought I'd do a very quick video on it. As far as if you're wondering what I think of Bitcoin right now, I think Bitcoin's great. I still think that as long as the stock market doesn't fall apart, that Bitcoin has the potential to go all the way up to $28,000 to $32,000. That's what I believe. Now, there's some key levels that Bitcoin has to take out, and I don't make this a Bitcoin video, but just keep in mind that Bitcoin is still underneath its 50-day moving average, right? Sorry, took it out. I was looking at the CME. So it looks like we did kind of get a stutter step at the 50. That's a big feather in the bull's cap, because taking at that 50 was a big line of resistance. So if we can get above that and stay above that, then that opens up the door to move up toward the 200-day moving average, which is up around 35K. It also opens the door to move up to, like, this was a chart I posted. Look, way back in the 3rd. Here it is. 28 to 32K is the zone I'll be watching. This is what I expected to happen for it to come up, tag that zone, and then more downside. And that's what it's doing. So, that 200-day moving average is a potential target. We got this 200-week moving average that we have to be mindful of. We need to get it back above that before we get too bullish. And then the 19-week moving average is where I think we'll probably see it stall out if it does move up. Right now it's around 31.6K, and it's right inside of this zone through here. So yeah, I don't make it a Bitcoin update video, but just those are my quick thoughts on Bitcoin. The main thing I want to point out is, obviously spend some time learning about options if you haven't already. They're definitely worth the effort. And if you want to shortcut that process, like I said, I'll put a link down in the description. You can join my trading course. I've simplified things to the point where when you join that course, like I said, you get the options course, you get my main trading course, and you get my Tradingview indicator called the Racing Rabbit. You get all that stuff in that course for just one fee, right? It's an annual subscription. So check it out. All right. Also, if you like this video, give it a thumbs up, subscribe to the channel. Don't forget that I am just some guy. I'm sitting in a spare bedroom, and that means that nothing in the video is financial advice. You should always go out and do your own due diligence and seek out professional financial advice from a licensed financial advisor, which I am not, before making any type of investment in cryptocurrency, the stock market, precious metals, Forex, or any other tradable asset. This is James with Crypto Common Sense, reminding you all, please trade safe.